All right, joining us right now with more on the retail sector is Manny Chirico, LNK partner, BCI Brands chairman, and former PVH chair and CEO. Manny, first of all, thanks for being here. Why don't you break this all down for us? What are you going to be looking for from these earnings results? How much do you think we'll see on the tariffs front? How much do you think we'll see about the strength of the consumer?
I think business has been good through the second quarter. It's actually gotten better as the quarter got on, and back to school is off to a strong start. I expect second quarter earnings to be good pretty much across the board. I'm sure there'll be a few exceptions for underperformers, but I do expect the guidance for the second half to be muted and conservative.
Why?
I think because of the tariffs. I think we're looking at especially in the soft good retailer, footwear, apparel, accessories. What you're going to be seeing going forward is tariffs averaging somewhere between 20 and 25%, and that is a cost that the retailer is going to have to deal with. I think that the wholesale companies, the manufacturers overseas, the importers, are eating about half of that in this next 6 months. A combination of the retailer themselves and the manufacturer overseas. So I think you'll start to see prices increase anywhere from 5 to 10% in the back to school season, and particularly in the holiday season. And then I expect that to continue with price increase in the first half of next year as those prices all start to roll their way through to the consumer. There's not a big enough profit margin for everyone to hold on and eat those tariff costs going forward.
You know, I think a lot of people assume that we will see in the most recent reports the impact of the tariffs, but there is this issue of how much was pulled forward, how much they brought in ahead of time, how much they've been able to dodge some of them, and with the tariffs maybe not fully kicking in to some of these goods. I mean, this is the big question with Jay Powell, the chairman of the Fed. Will we see inflation at this point, or you think it's really just something that's slowly starting to wind in right now with back to school?
I don't think you're going to see inflation significantly in the retailers' margins in the second quarter. I think you're going to see the guidance where they start to talk about cost pressure and raising prices. And then the whole question about is how the consumer reacts to that. You know, I think you'll look, the big box retailers, I think, have the scale and a much more diverse basket that they can manage it pretty consistently. Specialty retailers and department stores, all soft goods, they're looking at tariff increases, and that those payments are due immediately on entry into the country. It's a seasonal business, so through July, minimal goods have come through with real tariff impact on them. But starting August and beyond, back to school, you're going to start to see the margin pressure. And as we get into the fourth quarter, you should really start to see the margin pressure. And I think you're going to see ticket prices across the board up anywhere from 5 to 10%. And what you'll see is planned promotional markdowns and discounts that'll be worked into the model, assuming that the consumer will push back a bit. So I think the earnings reports are going to be fine in the second quarter. And even the full year guidance, I think the retailers will manage it, but they're definitely going to be seeing pressure on costs in the second half of the year.
Let's talk about some of the retailers reporting this week. Target, Walmart, Gap, you've got Macy's reporting too. Who do you expect to be winners? Who do you expect to have a tougher time dealing with not just what they can get into the stores, what they can charge, what they can eat in terms of the tariffs, but what they mean to the consumer too?
I think Walmart will continue to perform. The sense I have, and I don't have any insight into this, but the sense I have is their sales have remained fairly strong. They started to see a little bit of the tariff pressure in the second quarter, but it's been minimal. I think that will intensify in the third and fourth quarter. So I think their guidance will be conservative going forward, but I think their second quarter results will be solid. I think you mentioned the Gap. I don't want to pick on them, but I think the specialty retailers, their results may be fine through the second quarter, but again, just to say it again, I just think they're going to be under margin pressure in the third and fourth quarter. And I think they're going to plan for it as they go, when they're giving guidance to the street. Everybody wants to under promise and over deliver. So I think they're going to build in some level of margin compression for the second half of the year.
And Manny, very quickly on Target and Ulta, the partnership that they had formed, that is, they're going to be going their separate ways. What does that mean for Target?
Okay, I think in that situation, strategies really just weren't aligned. I think, Ulta is a high-touch consumer service model dealing with the consumer, and Target is a value-oriented retailer, minimal customer support and service, store presentation. I just don't think the strategies were aligned. I think Target will have a harder time dealing with it. The availability of brands at Targets will be more limited, and I think just the presentation will not be as strong. They'll look to make it up with value, but I think they have, I think in this environment, they're going to potentially lose that higher end consumer that goes in there, that discretionary shopper. So I think they'll have more of a challenge to deal with it over time.